traders. I'm Dale Pinkert. Let's have a great day. Everyone doing okay? Hi, Dan, Patrick, my two stalwarts that are always there wishing me well at the beginning of the broadcast. Appreciate it. So my best idea this week was a short in Euro Kiwi. We were here Monday. I said if we broke down here, eventually I think we work our way down to 65. Pretty big trade already, a couple hundred pips. Let's look at the daily. Trying to hold this support level right here. I think Steve had some support here. But actually, I think its potential is just really beginning, that we could end up with something like this from here and eventually challenge and even take out these lows. We'll see. We'll see if we could dig in its heels. So far, it's doing nothing right. I really don't have any divergences developing, and if they are, momentum's pretty weak at 24. And on the 4 hour, there's nothing there to say cover your short. Although, you know, you never go broke taking profits. My philosophy is always take partials. So you should at least have partials, and now with this type of decline, have profit stops in. Not just break-even stops, but profit stops. And wow, what a wild and woolly stock index environment we have. NASDAQ up 200, down 200. Actually, we're getting some nice divergence here at new lows in NASDAQ. Peter Goodburn's looking for a pretty good rally, actually. He's looking for new highs, so maybe there's something there. But this is the way it looks to me. And this, I think, is going to be the key to whether or not we wash out, take out Feb lows. It's a VIX here. As you can see, we have either an ascending triangle, or you could call this a left shoulder, a head, a right shoulder, neckline around 2580. So if we get through here, we could head up towards a 3840 level. And in that environment, you know, we're going to be taking out the February lows, heading towards some of the targets that Steve Volge had mentioned, 2450, 2410 in the S&P. Everyone with me so far? This is really the big line in the sand to be protecting your IRAs or any other long-term money that you have in the market. We start closing over 26. The VIX is going to have some type of rally. Maybe not to 50, but maybe up towards 40. Everyone with me on that? Give me a Y if you are. Okay, so watch that number. In the end, I still don't think, you know, with the market under pressure, even though we're giving up some ground here in the end. Just looking at some things a little shorter term on the 1 hour. You know, we get higher lows. This is a higher low. This is a higher low. So, you know, it is possible that it turns from here. But if the VIX breaks out, even if the VIX breaks out, we could have something like this from here that would take it maybe down to 530. But that's still going to be 70 pips above the low from last week. So this range is still containing it, and maybe we get some type of ABC. We start clearing yesterday's highs. We're on our way to higher levels, but I can't discount, in case things get out of control, that, you know, this was 1 or A, and this is ABC for A, and this is B, and we get a C and still put in a higher low and then rally, because I don't think that we're going to take out these lows until higher levels are achieved. In fact, Steve showed the trend line yesterday, and I have it here too, that it is possible for yen to just have it be a corrective move in a bear market back towards 109, 110, and then continue its decline to take out these lows. Everyone with me on the end? And I noticed that Stell has a pattern in play going here in Aussie Kiwi, and it's interesting. I just want to show that. Here we go. So it's under some pressure here. There's your weekly. I don't think, unless it's a major reversal, it's going to turn this week. But the daily is showing some nice divergence. And so is the 4 hour. Getting this little inside candle here. But the 1 hour, I like the 1 hour to line up too. And we still have a confirmed low. So we could bounce around here and do some work and have some accumulation happen. But this would definitely be on my radar screen on the Aussie Kiwi. And plus, fade Stelios at your own peril long term. Long term, I think he's got a very good hit rate. He doesn't use leverage. So he doesn't care if we go to, 104.80. It's not going to change his picture, but I know a lot of you guys want to tighten things up. So definitely the number one reason is Stel is looking at it. The number two reason is we're starting to get some non-confirmations in Aussie Kiwi. So keep an eye on this as well. I still favor, with all this going on, I still don't think, just like the yen, that the dollar is done. Blake has talked about 91, 91.50. And if you look at it here on the weekly, well, let's go to the daily. You kind of have potentially a three drive pattern and confluence coming in here at 91.50. And I think that would be enough to really take care of a lot of the dollar bearishness if we got up to 91.50. A lot of people are going to be focused on 91, right? It gets back over 91, maybe they're going to turn bullish because it's going to take out this trend line here. See if I could get it to extend. No, not that one. Well, anyway, you know what I mean. So up here around 91.50, I'm a dinosaur with this. And it's also a line, line in the sand there as well. So I'm thinking 91.50, 91.60 in the dollar still is viable. So we'll be watching that. And just to keep an eye on this too as well, the Dow has not made a new low yet. It's holding last week's low, so, or maybe this was Monday's low. It's hard to tell anymore. And the S&P, same thing. So even if we, whoa, I got some money. Richard Watkins, okay. So looking at this, even at new lows, we're going to have kind of like a 1 or 2 or 3 drive to a bottom here. Everyone with me on that? So as far as the euro, I'm going to leave some of the majors for Blake to cover, because I really can't get bullish, and now after this decline, it's hard for me to get real bearish on the euro. Actually, it kind of looks like a natural for it to break back down to the line in the sand around 121. So I'm interested, and that would, I believe, continue to make Euro Kiwi work as the euro shows relative weakness to Kiwi, which is still up 30 on the day. So I hope that helps. Yes, okay. Dan Norberg likes 105 area. I do. I think we could go to 91.50. I'm considering this in the Dixie to be a bear market rally, and maybe that takes euro down to 121 before we get a continuation of the uptrend. So that's just my opinion. Let me give you the caveat. I'm right often. I'm wrong as well often. So I'm both. There are times I don't know. And the difference between pros and amateurs are pros know how to lose, so they have money left to be right with. So let me pass it over to who I consider to be one of the best pros in the business, Blake Morrow.
Hey,
who, yeah, I mean, I know you're a pro because you have losing days, and your resilience after a losing day reminds me of when I was a young man.
I'm actually about ready to tweet a picture of the pound, or an hourly view of the pound. The pound's actually very, very dangerous, and it's starting to break now as I just tweeted that. Very, very scary. Look for the cable. Hold on really fast. Let me grab the screen. Trying to get it over to the screen here. Hold on, give me 1 second. There we go. All right, so the cable is coming into the 140 level, and it's been trading heavy all day. And I mean, the risk here is that if the pound breaks down, that it kind of kickstarts a little bit of dollar strength elsewhere, which, you know, the dollar index, I mean, I got pretty close to getting stopped out of the euro dollar short last night when the dollar index spiked down. And I'm going to take you over to the euro really quick. See the euro, see this downtrend line?
Oh,
yeah, it was, yeah, went through it. And I had my stops fairly wide, and they just got missed. And then the euro's come back down, but it's really it's right now the cable's kind of leading the way. And if the pound breaks down, then that might you know, like I said, kickstart a little bit of dollar strength. So we got to be watching the pound closely. We've spiked down here before. I mean, think about how many times we've been down here. I just have to imagine that there's a lot of stops that are building now below these lows. And you know, let's talk a little bit about, you know, the
because of this, Blake.
Let's say what? I'm sorry.
Maybe there's something developing in euro pound because of this development of the pound breaking down.
Well, it bounced off support. I mean, just you can see how it's just we're range bound. So I mean, it just bounced pretty aggressively off support. But I'm not really paying attention to the euro pound yet, because we've been in such a tight range for so long. But you know, like I said, I'm more focused on the dollar now. Let's talk about this for a second. So the S&P, really nasty moves in the stock market. Obviously last night with China's announcement of how they're going to retaliate to the U.S. with their, is it tariffs? I don't know if it's tariffs. I have to go back and read everything that they've said, but it's the theme here is basically tick for tack. You know, we come after China, they're going to retaliate, and the stock market's not taking that obviously too well this morning. Now, stocks are off of their lows, really key support here, but you know, if you go over to the S&P, look at how critical the support is. We're back below the 200-day moving average, obviously, but you know, a lot of support down here, about, you know, 40 S&P points away, and you know, the scary thing is if we really start breaking down, and it's not just the S&P. I'm going to take you over to the NASDAQ 100. The NASDAQ 100 tested the 161% extension, and also this major uptrend line that's been in existence since 2016. Okay. Wow. 2016, yeah, and we're testing it right now. So obviously you can understand why we're bouncing here, but at the same, and the 200-day moving average on top of it. But the scary thing is if we do break, you know, if we do break down, the NASDAQ's really gonna, I mean, I'm, you know, I come with the assumption that we are breaking down. Can you look at this chart and understand why I would say we're going to eventually break down? Any ideas here? Can you guys? I'm gonna look at your answers and see if you can if you can guess. By the way, ADP non-farm just came out. Good strong number, 241,000. Okay. Isn't really moving the market right now. I mean, the dollar is moving just a little bit, but actually the euro's
the false breakout at new highs up there.
Wait, which things? Yeah, so let's go back to the NASDAQ. So yeah, false breakout, okay? The false breakout is one. The 161% extension on a weekly basis from this is the 161% extension of the .com bubble move, okay? So we have 161% extension, a false breakout of the highs. So this right here should lead to a breakdown. Okay, now does that happen today? You know, I don't know if it's going to happen today, but eventually, you know, we should break lower in the NASDAQ because of the false breakdown, 161% extension rejection. All that tells me that we're eventually going to break down. Like I said, is it going to happen today? I don't know, but the news that's coming out right now and the news that's surrounding the market definitely has investors on edge. So the next question is, because and you're like, well, you know, Blake, why are you so focused on stocks? Is because how does it affect the currency market? And one of the reasons why I think the dollar is performing well right now and might continue to perform well is that if we really go risk off, like, you know, the stock market reverse, or, you know, sells off and we break these uptrends, and let's say we now go into a longer term consolidation phase. When I say long term consolidation phase, I'm gonna roughly draw you what I would think by that, roughly, right? Just imagine the next year doing this, okay? But this period right here of a sell-off may yield some dollar strength as a result, as investors get skittish. They say, you know, screw this, I need to buy, you know, just give me into cash, and they put themselves back into dollars. And that's, it's not like I look at the dollar and say, okay, everything's changed and, you know, there's something fundamentally that has changed that has got me really bullish the dollar. It's just technically the dollar looks like it's firming up, and I'm trying to gather a reason why the dollar might in the near term gain some strength. And I think a lot of that has to do with if we do have some risk aversion, you know, if the market is a little risk off, we are, you know, we might have a little bit of an issue with it, with the dollar, you know, becomes the de facto currency of choice. So that's kind of what I'm thinking with the dollar. And you know, I'm going to take a real quick look at some of these majors just so you guys have a view, and before Steve gets here. So, oops, here's the euro. The euro is, you know, we get below this support zone right here, which is 122.40, and it might get a little bearish. You know, the euro also, you know, false breakout over here might lead to a breakdown, but this is this nice uptrend line that we've been following since April of 2017. Okay, so and remember, the world is long the euro dollar. That's something that we should all be aware of, is that the market is extremely long the euro. So, you know, you factor in a couple of things between, you know, investors being very long the euro, so you might get some position squaring, some risk off. There might be some demand for dollars, and we could really see, you know, the euro come back, as you said a little bit earlier, Dale. The euro could come back and see 121 without much of an issue, in my opinion. It could really, you know, make its way back down there again. Are we going there, you know, today? Is a breakdown going to happen today? I don't know. I hope so, because I'm short the euro. But that doesn't, just because I'm short, it doesn't mean anything. I've been whipped around quite a bit the last few sessions. Actually, going back to last week, I've had a really, I'm actually down over the last, you know, week. I've had a rough, you know, getting whipped around, because we're in the apex of this, you know, this sell-off here, and you can see these whipping moves here in the S&P has really got, you know, the currency market on edge. It's got obviously the stock market on edge, and volatility is high, and there's not a lot of follow through.
Not a lot of trends, a lot of big sideways ranges.
A lot of whipping around. You're right, Dale. You know, a lot of it. Now, if you go to the Aussie, you know, retail sales were stronger, building approvals missed. The Aussie came under pressure. Well, it rallied and then it came under pressure, and I think a lot of that has to do with risk aversion. I'm still a little, I mean, I look at the Aussie and I'm like, okay, this Aussie could squeeze to 78 cents. It could also drop to 75 cents. I really don't know which would be the first you know, thing to happen, but I think that either one of those things could happen with this particular pair. The Kiwi's been extremely resilient. I haven't been able to put my finger on any reason why the Kiwi is so strong, other than maybe it's because the Aussie New Zealand is so weak, so we're seeing, you know, some flows into the Kiwi dollar. But you know, I would think with things heating up in China, and China being New Zealand's biggest importer of goods, maybe the Kiwi dollar is faring a little bit better because China might turn to countries like Australia and New Zealand for more of their goods versus from the U.S. You know, it's hard for me to put my finger exactly on why the Kiwi is doing a little bit better right now. But with periods of risk aversion, as we're seeing, I wouldn't be surprised if the Kiwi finally rolls over. I am short some New Zealand dollar right now, and I because I'm sitting here scratching my head wondering why it's so strong, but it is resilient, at least for right now. The US dollar Canadian, we had a really big bounce. And by the way, I think a lot of people are short the US dollar Canadian for a couple of reasons. They're short the US dollar Canadian because of you know, NAFTA. People assume that the NAFTA agreement's going to get done. You got this big head and shoulder pattern, but in my opinion, we were at the neckline and we're bouncing. And one of the reasons why we're bouncing is because you know, we got a little risk off, and the New Zealand or the Canadian dollar tends not to do as well under periods of risk aversion. So we're seeing, you know, a push higher in the dollar Canadian right now. Swissy, very resilient. I'm surprised the Swissy's doing so well in this environment. If we have truly risk off, the Swiss franc could at any time start to strengthen. So you got to be a little careful here. Peso, you know, we had this breakdown, almost hit the 127% extension. Same thing with the Canadian. Hey, you got a lot of people that are short the US dollar Mexican peso. It could, you know, it could scream higher at any moment. So got to be careful with that one. And you know what currency is acting really well is the US dollar Swedish krona. And this is one currency pair that I tend to look at when trading the dollar. But look at how strong the US dollar Swedish krona is. If the euro dollar actually starts to break down, the US dollar Swedish krona is going to be probably one of the currency pairs that act really well. And it's one that I've got on my radar, just in the event that the euro does start to break down. Okay, if the euro really starts to crack through these supports, this US dollar Swedish krona, it has not been able, I mean, you know, if you've been trying to short this thing, you are, you know, just getting run over on a daily basis. So if the dollar really starts to scream higher, this thing could really take off. You know, another situation where you got a false breakdown, and now we're seeing a break or a move higher. So it's, you know, definitely something that I want to pay really close attention to in this environment. And then obviously, you know, we can talk a little bit about the dollar index. Oh, I should go over to the dollar yen really fast before Steve gets here. The dollar index, you know, there's a lot of levels that need to be broken. 90.50, 91, 90.70, lot of overhead resistance. But if we start clearing some of these resistance levels, that's where the dollar could, you know, start that snowball effect and really start to rally. Now the outlier here is the U.S. dollar Japanese yen, which I don't factor into my dollar index overall ideas. So everybody should know that, and if you don't know, I'm telling you right now that the dollar yen is not it's on its own program, and it's mostly due to risk aversion and risk appetite. We had this nice rally here in the dollar yen yesterday. We reversed because stocks are heavier this morning. We have to watch the dollar yen. I mean, the dollar yen seems to be in this down channel, and a move to 104.50 down here cannot be ruled out. We have had bounces. Bounces have been held at the 38% retracement, which is basically 107. So as long as we stay below 107, the risk is still lower. So it's again, it's something that that I'm just watching. I'm not really trading the dollar yen because I feel that I missed it overnight. I wasn't short up at 106.50, so I don't know if I really want to short it right at this moment in time. And so I just haven't. I'm not trading the dollar yen. I got kind of whipped around in the yen pairs a couple of days ago, so I'm just kind of and with the pound yen was one of them. I got whipped out of this thing. It was rallying. I'm like, okay, this thing's gonna break out, and it just turned right back around. So I'm leaving the yen pairs alone right now because I'm not too sure how they're gonna react. While the stock market is still being supported by the lows, the dollar yen is up, and I would say it's even outperforming at this point. But if the stock market really breaks down, then these might break loose back to the downside. So I'll just be watching them. But the setups here that I see are not great. There's not a lot here that I'm really interested in at this very second in time. So anyway, with that being said, I'm going to have to pass everything over to Steve and Stelios. Guys, are you here this morning?
Hey, Blake. Good morning, mate.
Good morning. How are you?
I'm good. How have you been?
I'm trying to keep my wits about me, but I've got to really get back over to the markets right now, and monitor this euro. So, all right, guys. Hey, thank you very much, and I hope everything's well for you over in Rhodes.
I have no complaints, I have to say.
I'm sure. All right, thanks, guys.
Have a nice rebound day, Blake.
All right, thanks, Dale.
All right. Hey, Steve, how are you, buddy? And Stel, how are you?
Hey, Stel.
So, Steve,
I'm good, Dale.
Okay, good. Nice continuation move on your short Euro Kiwi.
Yeah, I was feeling very confident about it because if you remember, I already had a trading plan for it. If I saw those pairs reverse, Euro Kiwi was my preferred short. And the good thing about having a plan in advance is that you don't hesitate and you don't feel. I mean, just to give you an idea, since I'm on vacation here, I didn't even feel the need to check it out overnight at all. I mean, I hadn't checked it until a few hours ago at all. I wasn't even worried about it.
Yeah, that's nice when you have that kind of conviction, because isn't it beautiful when a plan comes together? But you need a plan for it to come together. And instead of trading on the fly impulsively, and I stress that all the time. Some of my best analysis, Steve, takes place on the weekend when everything is quiet and closed. Do you find that to be a good time to do it as well?
Yeah. Also sometimes you might start thinking about something like when you go to lie on bed, or when you're like relaxing and drinking a coffee, you might be thinking like oh, this might be a good setup, or whatever. Sometimes you need to relax a little bit for your mind to to start thinking more clearly. You just take a little bit of a distance, and sometimes when you take a little bit of a distance, you gain a much better perspective. You know what I mean?
Ever dream about trading? You have trading dreams?
Yeah, and since many years ago that I stopped trading short term, the few dreams I've had have never been nightmares, and that's quite important. You know what I mean? Yeah.
Certainly is, man. Well, sweet dreams.
Once you learn, thank you. Once you learn to adjust, once you learn to adjust your trading style to what is comfortable and what is proper for you, and you adjust your leverage as well, it's not stressful anymore. In all honesty, it's not really stressful. I mean, you make it what it has to be for you, because the most important thing is that you have to mentally, psychologically be at a good state to do this properly, right?
Yeah.
If you're keeping yourself under stress, or you're pushing too much, I think you only do damage. You don't do any good.
Ziggy has Bitcoin.
So he has, huh? I bet that there are a lot of people that have
crypto is. Yeah, I think it's appropriate because maybe crypto is just a dream.
As I said, we had this conversation on the chat room as well, and I was talking about that with some friends. I told them that, listen, from a technical standpoint, there has been some times in the move lower that I was contemplating of buying just by seeing a chart. But in all honesty, knowing that the intrinsic value of cryptocurrencies is zero, I cannot persuade myself to get involved with that. And I was having this conversation, I remember specifically with Velu. He told me, okay, why don't you buy some? And I said that, for me, since I believe that the intrinsic value is zero, and if something happens, you get absolutely nothing back. Just going through the procedure of like opening an account with, wherever I need to open an account to be able to trade cryptocurrencies, to buy a little bit, because I wouldn't feel comfortable buying, a regular amount that I would buy for FX or, for anything else, for indices or whatever. It's not really worth it. And, to buy a proper amount, I can't allow myself to do that, because I really don't believe that there is, that we can be certain that there is any value there, right? So that's why I've stayed away from crypto since day one. And, I need to see a lot more to be convinced. And I absolutely don't have FOMO at all. If you remember, I remember we had this kind of conversation in one of the company meetings. You remember that it was when Bitcoin was exploding, and I said that, and I remember you guys laughed. I said that, in all honesty, I don't care that I never bought, and I don't even, if I turn back time, I wouldn't be buying. And everybody was like, "Oh, come on, you would have made so much money." And I said that, listen, I would have made so much money, but if that was the person I was, I would have also lost a lot of money elsewhere in the markets, right? I don't know if you remember that conversation. So in essence, it wouldn't be me. It would be, yeah. I'd rather be conservative and take it the slow way than try to catch shooting stars, right?
Yeah, you're a very conservative guy. You trade FX. It's a very conservative investment. It can be.
That's actually true.
But a lot of people say FX is highly speculative. But if you manage your leverage, it's really not much different than trading a stock. Maybe stocks are not so conservative anymore, especially when you go to sleep thinking you have a good trade on. I'm sure a lot of people went home long yesterday after the recovery in S&Ps, and they go to sleep
and they don't feel so
wake up. They wake up with 41 handles lower.
Yeah, and they don't feel so good now, right?
Yeah, right. So.
Yeah, to actually, overnight SPX is down 1.6%. In how many cases do you see a currency being down 1.6%? It's a very rare occurrence, especially if we're talking about the majors, right?
Yeah, maybe the last time was when George Soros broke the Bank of England.
No, okay, so let's not exaggerate. Regardless. Okay, so let's have a last look of a few of our measures. By the way, Dale and Stelio, you need to help me a little bit, not only with questions before we get to that. Can you please tell me, because I'm on vacation, so I came last minute. Can you tell me a little bit what did Blake cover or what he didn't, so I can actually talk about the rest? I heard him.
Okay. Blake
I heard him
covered.
speak about. Yeah.
He was showing the pound weakness breaking down. He was talking about what was that currency, Stel, that was performing so well? The krona, the Swedish krona.
He talked about the Swedish krona, a little bit about the peso, about the pound, yes, about indices a little bit. I talked about Canadian a little bit as well, but he did like a broad overview of a lot of stuff.
Great. Okay, I have quite a lot more to show. One of the things I wanted to show is is cable. You said that Blake spoke about it. I just briefly want to say the following: the last 4 daily candles that you see in cable are definitely very indicative of a consolidation. And when the last 3 days before that were down days, you can understand even by watching the daily chart that yes, cable is obviously looking to fail here and resume to the downside. So I'm the person that I said that I'm maintaining a bullish bias both in euro and in cable, but that doesn't mean that I'm blind, right? I see clearly that cable wants to at least produce one more leg to the downside before any rebound. So obviously, if you are looking to be long here, I think it's a very bad bet, especially today. So far, what we have is an outside shooting star. Yeah, cable is very heavy. I would expect it to fail here literally at any moment, even today. Okay, so I think that is a very clear statement. I have nothing more to say about that. Now, having to do with the euro, the candle holding somewhat better. I was monitoring this ascending trend line, which has broken the downside. But as I wrote yesterday in the chat room, it's the only thing actually I wrote because I'm on vacation. When it was breaking down, I said that listen, it's breaking down from this trend line. Yes, Elio?
Sorry to interrupt. Your charts are not updating again. So maybe let's see. I think now it's about to update. Hold on. Yes, now we just switched to Euro USD. So we got another 10-second lag or something like that. Just keep that in mind.
Okay. It's okay. We can live. Yeah, we can live with that. Okay. I'm gonna try to switch a little bit. Okay.
Jason,
so,
I think Jason has a comment on euro. I hear him. You want to put him on?
Oh, that was not my son. That was probably one of Stelios's daughters.
That was
my son is currently sleeping.
My daughters, yeah.
Please don't let your kids become traders, okay?
You know something, Jason, and same goes for Stelios's daughters. They've been watching us like trade since the day they opened their eyes. So I don't know how easy it will be to avoid it.
Yeah, that's fine.
Yeah. I said yesterday that listen, we're breaking below this trend line, but you should be very careful because there are several levels of support for the euro. So, we still don't know what kind of a form this consolidation has. It could have been that triangle. In all honesty, the fact that we broke below that trend line and we're seeing no follow through tells me that probably that was not so important to the market. It might be something like a bull flag like this. Regardless, what remains a fact is that, first of all, Euro USD is obviously not looking to go anywhere fast from here. And second comment is obviously the fact that we remain in a consolidation at a bullish trend, which started like at the very first days of 2017. So nothing has changed here. I mean, we should probably remain in the dip mode. Even if we go back to the DXY, I know it might have a little bit of a lag, that's why I'm switching in advance. Even if we go back to the DXY, we can clearly see that the DXY is trapped within a consolidation still. The last 5 trading days, including the specific one that we have at the moment, have been mostly pin bars. Pin bars are notorious for showing indecision. So obviously the market has stalled there, and the fact that after rebounding from such a weak, after so many months of the dollar weakening, but we haven't even managed to break the first area of resistance, which is the 91 level, tells me a lot. I mean, it tells me that this is either a bull flag or a triangle, or I don't know how you want to see it, but I think this formation is going to fail to the downside. So one more push, at least to the downside, looks more likely than not. And I will remain of the same opinion, even if we break 91, which might get some people trapped, as long as we remain below 92.50, right? So as long as we remain below 92.50, I really believe that the DXY is to weaken further from here. Now, let's have a look at a few of the pairs I showed yesterday before we have a look at the indices. Yesterday, I spoke about the Aussie yen, the Kiwi yen, the CAD yen, and I said that all of them are showing the potential to rebound, but all of them were currently, I mean, at that point when I spoke about them yesterday, testing major resistance areas. So all of them, the Aussie yen, the Kiwi yen, the CAD yen, failed so far, right? So far is the key word here. So does that mean that they're continuing lower? It might be the case because they failed to break higher from critical resistances that defined the downtrend. But on the other hand, we still have, in most of them, some RSI divergences and some other divergences. So I would remain a little bit neutral, waiting to see if today's weakness is just a response to those key technical levels, or it's a normal rejection and continuation of the downtrend. So I think that if you're looking to be long, I don't think that that the potential of breakouts has been completely eradicated. But as I said, key levels were not broken, although they were being tested. And as long as that's the case, you need to respect the previous trend. So I'm already showing the Aussie yen. I don't know if you can see it. So Aussie yen, as you see, almost tested resistance yesterday and of a descending channel and failed. The Kiwi yen did break above the equivalent descending trend line, but it failed just a little bit above it at a horizontal resistance area, which was at 77.60, call it roughly. So we have a no-go yet here, although it looks better than the Aussie yen. And if we have a look at the CAD yen, let me go at it. You'll see that the rebound is still in a sense ongoing, but we did not pass above the 83.50 area, which was a previous high. Regardless, as I've said, I think that the move towards 85 is not unlikely at all, right? The question is what happens from there, because for me, CAD yen is all about the 85 level. I think that a rebound up to 85 that doesn't change at all the trend. And if I see a rejection from there, I'm actually gonna even consider selling it. So now having to do with the rest of the crosses, as you said, Dale, Euro Kiwi resumed very nicely to the downside. I think that the area that I talked about yesterday, 166.75, might act as a magnet. I'm really hoping, because that's where I'm aiming for. I actually got a full position now after touching the previous lows. So I'm now in a full position here. Let's have a look at the Euros as well, and then I'm going to speak about the indices. As you see, Euros is holding somewhat better, right? Let's have a look at the Aussie Kiwi so I can also show why this is the case, because we haven't showed the Aussie Kiwi lately. There you go. Aussie Kiwi obviously resuming to the downside, but be a little bit careful here. Let me zoom out. We are testing once again a critical area of support. It's a triple confluence, as you see, or you're going to see in a few seconds. So it's a triple confluence of a descending channel, of another descending trend line, of a triangle trend line that has been broken. We're testing it as support at the moment, and it's also horizontal support resistance area, roughly here at 1052 to 1055. Obviously, if we break below here, that's quite a bearish development, because then it opens the door for a test of 104. As long as the Aussie Kiwi remains under pressure, which for now this is the case, you should favor, pauses, weakness. So wherever you're looking to be long one of these commodity currencies, you should choose the Kiwi. Wherever you're looking to be short one of these commodity currencies, you should choose Aussie, ideally. Of course, I know that in any case, technical formations are very, very important, right? So, I found myself, on occasion choosing the one that's not, more, that's not stronger or weaker, because simply, a cross currency I'm looking for has a more clear technical picture. Sometimes I'm going to favor that. I'm just saying. Now, having to do with indices, obviously, that yesterday's rebound seems to be failing is quite important, but the 2560 area is holding. I'm not expecting that to last, probably, especially if we close for one more day below the 200 EMA. I think that market participants are more or less going to get more convinced that there is more downside left here. And I think we will see an extension to 2480 or 2400, as I said. So I think today is going to be quite a critical level. If the bulls manage to regain the 200 EMA despite starting so weak, it's going to be an important step. But if they don't manage to do that and we close near the lows, I think that 2480 is a matter of a few days, to come. Now, the DAX, I wanted to show the DAX because we talked about it yesterday as well. We said that, any rebound, I would be very, very reluctant to win any rebound as long as we stay below this descending trend line. The DAX is under pressure once again. I think that if we fail here, 11,400 should be coming soon. Same deal with the FTSE. I said yesterday, or the day before yesterday, when was it near the highs, we were actually testing this area, and I said be very careful, because 7,100, which we tested like a few hours ago, that's what I said 2 days ago, is a very critical area of resistance, and we're currently testing it. We can now confirm, said that the initial test of that area did produce a rejection. As long as we stay below there, I think that there is a high probability to see new lows. So I would definitely not be long as long as we stay below 7,100. And let's have a look at the Nikkei as well. Okay.
I think we're having problems because it's still showing the DAX right now. So I don't know what's happening with the connection.
Okay, still, we'll see. Tell me when it switches, actually. Okay.
Yeah.
Yeah. No, I can confirm. I mean, I am even having
it's
a little
just
bit
switching now to FTSE, just switched. So we need
okay.
You were talking about it for a few seconds. So.
Okay. I actually need to refresh my page because obviously something is not doing well here. It's
Okay.
it's the Nikkei
now.
Okay. So the Nikkei anyhow is it remains weak. It remains in a consolidation near the lows, and I just refreshed my charts, by the way. You'll see it at some point. So bottom line, we don't have a confirmation that risk is turning on. We've seen an attempt of a rebound, but we haven't seen any indications that the market has managed to stabilize. So all the yen pairs we were talking about, and the technical levels we were seeing about stocks, keep in mind that we still remain in an environment that risk is under pressure. There is still the potential of a rebound, but for the yen pairs, but critical levels have been holding. So, in my opinion, you need to remain a little bit cautious, right? Blake, I saw that Blake showed also the USD yen. what I have to show about the USD and USD yen, let me switch to that. I know that it's going to take some time. Is that the USD yen is holding the resistance? This is the fourth day today that during the last 6 trading days that the USD yen is testing a descending channel's resistance, and so far this channel resistance is holding. I would not rule out at all the fact actually that USD yen is holding near the channel's resistance while some of the indices are breaking down is quite a significant divergence, right? So I wouldn't rule out that if stocks catch a bid, the USD yen can break above this channel's resistance and extend towards the 109 area. So I still believe that's quite a strong possibility, especially as long as we remain above, let's call it 105.70. There is that potential, but there is nothing yet that has proved that we've got a longer term reversal here, right? So,
Steve, I was thinking on yen. I was thinking on yen, if you go to like a 4 hour or 1 hour on that.
We go to a 4 hour.
Okay.
Okay. I already did it. It should take a few seconds for you to load, but I'm down in a 4 hour chart. Yeah.
I was kind of thinking, I'll wait for it to come up, but that, that first pullback we had from the trend line, and this is a lower high, that we could have a pullback like that without making new lows, and then attempt a rally to break out.
No, it's very likely.
You know what I'm saying?
Yeah, absolutely. I mean, the structure tells me, if I had to use the yen in isolation, what do you see here? You see a clear downtrend from the highs, and then there is an obvious loss of momentum because simply the angle with which the USD yen started descending, became less and less steep, and then it stabilized more or less. Then we started seeing very clear RSI divergence both on lower time frames and on the daily chart. And it's currently diverging the rest of the risk assets. So in all honesty, I do believe that, if stocks stabilize, USD yen is going to break to the upside and make an attempt to rally towards 109 area. So can you see now the 4 hour chart, by the way, as you asked?
Yeah, I was thinking, you see that after the first rally, we pulled back from 107 to like about, 560, something like that. If we did something like that from yesterday's high, it would take it to about 530, but it would still be a higher low from the low at 104.60. That's what I'm thinking might happen if we get the S&Ps to cave, that it still may not make a new low, but kind of like a little ABC down to 530 or so, and then be set up to go to 109. Just a guess.
And speaking about it, let me already switch my chart because I want to show that with the bonds as well, both the bond and the treasuries, because it's quite important. It's one of the things that I always look at. I mean, at least 2 or 3 times per day, I'm watching, the bonds. Although I very, very, very rarely trade the bonds, I always take them very seriously into account what they're doing because bonds are very often leading the way. So probably you should have by now the bond being shown. I've already switched to it like 10 seconds ago. What I'm seeing here in the bond is, first of all, that we got rejected from the 61.8 over the last move lower. We remain within a channel. I have to say that the short-term structure looks like a bull flag, so I wouldn't rule out another push higher towards the 61.8 from another high, actually, which comes at 162.70. But I can tell you one thing for sure, is that I would be looking to be short the bonds, if anything. So I believe that this rally at some point soon, it's going to fail. I don't know if it's going to be yet, because as I said, I'm looking at the short-term structure and it looks to me more like a bull flag. But I don't expect this rally to hold for much longer. That would also bode well with the possibility of seeing one more leg down for stocks and then seeing risk stabilize good for good. I mean, for a period of time at least. Now, let me already switch to the treasuries, and let me say here that, you know, on one hand we've seen a break above this trend line, but on the other hand, nothing has really changed. I mean, the treasuries have been very weak. The rebound has been without momentum at all, and we've retraced just a small portion of the last leg lower, and that tells me a lot. I think that once we see even the fact that stocks have been very weak and the run to safety, as you said yesterday, Dale, which was usually the treasuries, has been extremely limited, tells you all you need to know about it. I mean, if the treasuries cannot get a strong rebound after seeing risk-off conditions for a decent amount of time now, what's going to happen if we see risk cuts a bit once again, right?
Yes.
I'm afraid that this 120 level in the 10-year is going to break. I mean, we're going to slice through it like knife in butter. So I think that being long the treasuries is something that might work in the short term. I mean, I see the potential if risk-off conditions resume for some time that we might get even a stronger rebound towards the 123 area. But I think this is a very rebound. It's a very vulnerable rebound. And once things stabilize, I think that the treasuries are going to sell off wildly once again. So it's a very dangerous thesis being long at the moment. Okay, Stelion, Dale, if you want to help me with a few of the questions to see perhaps what people want to have a look at.
Pound Aussie, pound Kiwi.
Sure. Although nothing much has changed since yesterday, but I'll be more than glad to see it. And
or,
let me remember to
Guppy and Euro yen.
Okay. So pound Aussie, as you see, remains in consolidation. It can be it can be a pennant. It can be a bull flag. We don't know yet. So far, it hasn't been really that weak, right? So I have to say that definitely, if I wanted to be short as I am one of these cross currencies, pound Aussie would not be. Pound Aussie would not be one of them. Would not be one of them for sure. Let's have a look at pound Kiwi as well. There we go. Pound Kiwi quite weaker. I see this as an expanding triangle, but regardless, it's going to load for you in a while. As I said yesterday, I think that the most important level to watch for the pound Kiwi is actually to watch this ascending trend line. It currently passes somewhere at 191 roughly. So definitely it's weaker. You know, since the Kiwi is stronger than the Aussie, pound Kiwi is definitely weaker than the pound Aussie. But I would say as long as we remain above 191, we don't have any serious technical damage done to it. Meaning, I would still be watching this as a corrective move, right? Definitely, though, no sign that you should be buying it as we speak. So I think it has to run its course a little bit. It has to weaken a little bit further from here before we can consider, even buying it. So not ready yet. I think more downside coming. But on the other hand, as I said, I'm not worried that this is an impulsive move that has started. Not yet, at least. I'm not seeing these kind of signs. Now, having to do with, you asked for the gapping. Let's have a look at it. I said that several days ago about the gapping. You're going to have the chart soon. I was monitoring the recovery of the gapping as being a slow, overlapping, channeled correction. That tells me, and I said that several days ago, that we should see more weakness coming from there. And although we're still holding this ascending channel, my thesis hasn't changed. I believe that the gappy will probably fail from here and produce at least one more low. I'm not seeing anything in this recovery from the 145 area that tells me that this is the beginning of another bull move. I'm not I'm not saying that it's impossible to even see new highs, but I'm saying that no matter what, I would expect more weakness first before we can consider anything else. And as you see, this channel, this ascending channel, has been barely holding, and that tells me all I need to know. Now let's have a look at the euro yen. Who do we have for an interview today, by the way, Dale?
There was a last-minute scheduling issue, so not going to have one today, Steve. But finishing the week strong with Chris Carolyn, who really was made his reputation with Robert Prechter many years ago, and I'm sure a lot of people recognize the name Vladimir Rybakov on Friday. So two good interviews to wrap up the week. Today, crypto not going to show.
Okay. So having to do with the euro yen. Euro yen actually broke briefly, like for half a day, above the 131.70 area, but that was a false break. That it proved to be so. So the situation here remains the following: euro yen is trapped between one strong support, which is the 128.90, 199 in 129 area, which is also the 38.2 of the last move higher for the pair, and the 132 area. Let's call it roughly the 132 area. We have been consolidating and oscillating between these two areas. The more we continue to do that, the more I'm going to be convinced that this is a consolidation that, given the prior move from the highs, breaking below that ascending wedge that we had, that this is a consolidation that is going to be resolved to the downside. So the more we fail to break above 132, the higher the chances of actually failing and extending below 129, probably towards the 126 area. Okay. My outlook also for the euro and the pound, I mean the euro yen and the pound yen, I think they bode well with the probability of the USD yen failing once again, albeit that might happen from a little bit higher from here. But I think that there are high chances that it's going to fail eventually. So euro yen, a triangle likely, a range, or whatever you want to call it, but definitely not enough signs yet to say that it has found a tradable low at 129. I will start considering that to be the case if we break above 132. As long as we remain below 132, I think that keeping a bearish bias is what you should be doing. The chances are much higher. Let me have a look at gold as well. I don't know if we have a question about it, but it's one of the movers of the day. And I want to remind you here, let me switch to it already so you can have a look at it soon. Let me remind you here that I said that this is a triangle. If you remember, I exchanged a few words with Blake at the beginning of the week about gold and the metals, and I said specifically that I have the feeling that metals actually want to make a move finally out of the recent ranges. And, I'm seeing gold being quite strong. It's still within this triangle, but in all honesty, for some reason, I'm strongly convinced, and I have nothing to back this up, but it's purely the fact that we're in a triangle, and my intuition tells me that it's going to break higher, actually. It's going to break above 1,350, especially if we see a daily close above 1,355. I think that's going to be enough of a confirmation that we're breaking above the triangle, and that should at least produce an extension towards the 1,400 area.
I'll tell you, the relative performance in silver is absolutely lousy.
Oh yeah. I mean, just look at them today. Gold is 1.1% higher, and silver is like, what is it, 0.25, something like that. So yeah. So
maybe
definitely.
that's because gold is like the fear trade, and silver still, with the market under pressure, looking at it as if the economy slows, industrial demand for silver slows.
And I don't know if my chart has already switched. palladium is the one that suffers even more due to that, right?
Oh,
You
yeah,
remember that when I got involved with palladium, I explained how highly correlated it was with stocks, and since I was actually looking for stocks to be weak back then, I said, listen, I'm expecting palladium to fail, and I'm going to remain short palladium as long as it keeps playing ball.
Wow.
Regardless of what gold is doing, right? And look at it. It has. Yes, sir?
Sorry to interrupt. Palladium is mainly used in industrial uses, right? People don't hoard it. They don't.
Yeah.
It's not a monetary metal.
Yeah.
That's why it should be following stocks much closer.
But they use that now in catalytic converters still. Instead of platinum, they used to use platinum in catalytic converters. They're using
we talked about that some time ago. You're absolutely right. Yeah.
Okay.
But you know, with the technology moving to electric cars and all that, all this is a bit fluid now. So.
Right. Steve, someone also wanted your view on crude, where it was going to bottom so they could buy it.
Absolutely. By the way, let me finish with palladium. I remind you that my second target is at 910. Actually, this is going to be the trade for. This is going to be the trade for the year for me if we make it to 910, because that's going to be a 13% move that I will have cast. So, that's not something you do every day, but, this is the kind of trades I love the most, you know what I mean? Because, yeah.
You love it more than me.
I had a very strong outlook.
Great trade, man.
I love it. Hey, how about you, Stel? Do you like winning trades more than losing trades? Everyone out here, do you feel the same way? Huh?
Let me think. Yeah.
Nice call, Steve.
No, I didn't.
Nice trade. So you're saying this trade was bigger than your trade that one day you contacted me? You didn't want to brag, but you had a huge day during one of the crash days in February, and the index.
These days, I actually had a lot of trades on which all of them moved concurrently in the right direction. But this trade is an indicative trade of the kind of trade I love, which is what? Exactly. Have a plan in place. I caught an entry that was nearly perfect, and technically it has behaved beautifully since. Beautifully.
They call
I closed half of it.
They call that a rainmaker.
Yeah.
Where the rain comes down and you get a bumper crop. So that's a rainmaker. Yeah. Nice.
And you know something? I closed half of it at 1,000. I kept the other half of it for my second target at 910. In all honesty, I'm very happy with it. I mean, somebody could say, yeah, but you could have kept, all your position. No, this is exactly how I wanted to trade it since the beginning. That's exactly how I traded it, and I'm very happy with it. I'm very content.
You know what, Steve? I mean? Most people would have been out of all of it and missed this last leg. So good discipline on maintaining a core position for it.
Dale, that's why I told you this is a perfect trade.
Yeah.
Look at this. In all honesty, if you've seen this move, this recovery to 618, then you see another extension lower, and you see this kind of a consolidation in that pennant, you are not abandoning your position. I mean, that pennant, so clearly a bearish consolidation, right? Just look at it. You're not closing your position there.
Right. Smart to hold.
Okay, so the question was about crude. Let's have a look at it. I have to tell you, I said yesterday, the move we had in crude the day before yesterday, it was much stronger than I expected. I said it, and I repeat it, that as long as we remain above this ascending trend line, which used to be channel's resistance and has acted as support several times since, I'm maintaining a bullish bias, but I obviously didn't like the fact that we had such a big down day as the one we did. So I have to tell you that I'm seeing the potential of actually a failed attempt to new highs and seeing a double top, but I cannot possibly advocate for that yet. I didn't have a position anyhow. The only reason I'm a little bit pissed off was because ideally in my mind, many times you make plans, and many times, those plans don't manifest. They don't come into fruition, right? In my mind, I was so looking forward to seeing crude push to 69, and that's 127% extension, so I can perhaps see a failure and be short. That if this ends up being a double top, I will feel a little bit sad, because I was looking forward to trading crude to the short side since many weeks ago. So it would have ideally been a trade that I wanted to take, but I won't end up taking. But I have no skin in the game, so whatever.
Yeah, I'd be
Having
careful.
said that,
People looking to buy the crude here, especially if the S&Ps are failing. This is part of the equation. So it's not a big sector in the S&P anymore. But I'm thinking if it does fail here, that the first break we had from over 66 to 58 was, about $8. And so 13 back from 67 would take it back to your major trend line at $55.
Yeah. Having said that, I think that as long as we remain above 61, people should remain a little bit cautious, having to do with being short. If we do break below this trend line, yes, I'm going to be looking for an extension lower, and 55, as you said, is a very important level. Perhaps a little bit higher, 56. The 200 DMA is also converging to that level. But I think we should remain a little bit cautious.
I'd have a bushel basket ready at those levels.
Yeah, I do see though that the downside momentum has started picking up, so I would start getting a little bit worried if I was long. You know what I mean?
Yeah. Look at silver's lower.
Another thing I wanted to show. Another thing I wanted to show, and I'm going to pull it up. I've already pulled it up in my screen so you can show it soon, is the fact that copper is failing as well. So copper responded very nicely to the area of support we saw, but today's move in copper is massive, and it's to the downside. So I would caution here as well, because if we maintain this kind of a momentum, we might actually fail below the 295 area. And if we do that, things start becoming a lot iffy in copper as well. So, so far the move lower has been quite indicative of what a correction should be. But the fact that, it's taking too long to resume to the downside, to resume to the upside, and the fact that we're seeing the down days being that strong, is quite worrying. So I would be very, very closely watching the 293 to 295 area, because actually, if we break below there, there's a huge pocket of air below. So, that can be a very slippery slope there, right?
Yeah, this was tricky because it looked corrective. Remember, we had that discussion about how can you tell the difference between distribution and corrective behavior. So I think now one of the reasons why somebody could start talking more about the fact that this might have been distribution is how long this move has taken, right? Yeah.
So the indication that there were chances that this was distribution and not a correction, the only indication there was the fact that it was taking more and more time, but the uptrend was not getting reestablished. So this is something that you have to keep in mind, that the characteristics of a correction can also be the characteristics of distribution, as you said, but you expect the prevalent trend to reestablish itself at some point, not take too long. And to be honest, copper has started taking
at 270,
right?
Steve, I'm joking, but if anyone thinks this was or is a flag, it's such a big flag, it would bend the flagpole and touch the ground. All right, so
Yeah, up to this point, let's say, no, I stopped viewing it as a flag when we somewhere at the beginning of February. But don't forget that you can have different types of consolidations that are not bull flags, right? So the potential of this bull being a bull flag, as you said, because you need an analogy, a healthy analogy between the pole and the flag. That potential, that potential stopped existing somewhere at the very first days of February. But there was still the potential that this was some kind of a prolonged consolidation before high. But now it has started becoming too scary to call it a correction. And a break below the 293, 295 area, I think is going to confirm that even if this is not a new move to the downside, it definitely wants to travel more, perhaps towards, I don't see any, if we break below there, I don't see any serious level of support until we get to 273, 274, somewhere there. So there is a lot of thin air, as I said before, to the downside, and I think people should be careful if we break that area of support. So you want to be long. I understand in the sense that you have a very well-defined risk here, right? But if we break below there, I would be extremely, extremely cautious because this move can accelerate. So that's it, more or less, Dale, unless we have any more questions.
Well, I'd like to interrupt you a few more times. So someone asked,
that's why we're here.
Someone asked if it was possible for me to stop interrupting for 2 minutes.
You know something, we even...
Yeah, but he wrote afterwards. He wrote, "We love you, Dale," afterwards, which is what we do.
Oh no, I saw that too. But I really can't help myself. Even sexually, I use coitus interruptus. So I'm a habitual. I'm a habitual interrupter. So even in bed. So I'll try to do a little better, and I'll bring some duct tape and put it over my mouth. And you guys are right. I interrupt Steve and Blake, and I interrupt my guests, and I just can't help it. Anyway, I'll try, Jai.
Personally, I have to tell you, I understand that many times, somebody being a listener, you get a little bit annoying when somebody interrupts somebody else. But at least us Greeks, we like dialogue. I mean, we're all very open people. We speak a lot with each other. I mean, and I have no problem with that because this is what makes a live conversation live. I mean, the fact that you can interrupt the other one from a process of thought that might be a little bit slower, and get him to to become more direct or change a little bit the subject or the topic of conversation. I have no problem with that. Honestly, I've never. You've never annoyed me because of that.
Okay. Well, let me interrupt you for a second. And I learned that people with ADD, they interrupt habitually. I don't know, maybe I have it, because they're afraid they're going to forget what they're thinking. So they have to get it out before they forget it with ADD, and they lose the concentration. Anyway, let me interrupt the session and end it right here. And, everyone have a great day. Good hunting. If you want, I don't spend much time in the private chat room. So, if you need more of Steve and Stell and Blake and all the pros and Amanda in the trading room, you need to join. And I promise you'll have more peace in there because I just drop in to say hello every once in a while. And do yourself a service. I have tweeted, and people that know me know that I do not endorse anything unless I have conviction about it. And I believe that ForexAnalytix is powerful, and do yourself a service and check it out. At least
I know it's rude interrupting, especially the epilogue of this, but this is something important I forgot to say. Our tablet applications, I don't know if Blake remembered to say so, our tablet, and remind me to say so at the beginning of tomorrow's show, our tablet applications are available to download from the Android Play Store and the Apple Store. So please go ahead and download them. They're for free, of course. If you're a member of ForexAnalytix, you can just log in using your credentials there. We're very happy, and I think that the end result was a great one. They're great applications. We've used a new design that we're also going to implement on the site within the next few weeks. So please feel free to do so. I'm very sure that you're going to enjoy it and find it extremely efficient and well built.
Okay, well, join us for our session tomorrow. We're live streamed on investing.com. Thank you, Stel and Steve. And Steve, please stop interrupting me and other people. And good hunting the rest of the day, my trading warrior brothers and sisters. Good hunting. And remember, don't just count your pips, count your blessings. You know, if you're depressed about anything, all you have to do is think about one thing you're grateful for. And we'll see everyone tomorrow, or see you in the private chat where I'm pretty quiet. And thank you, team. I do believe we're the best on the net. Paid, and to boot, it's free. So that's it. See everyone tomorrow. Good hunting. Trade lightly. Remember, NFP on Friday. So don't build huge positions into Friday. Start to think about lightening up and evening your book into that number, and we'll all be here together to react to the reaction. Thank you, Steve. Thank you, Stel. See you guys tomorrow.
See you, Dale.
Okay, buddy.